Welcome to Trading Lounge and the Australian report for the 24th of September. With the ASX here, there's a couple of things that, first of all, this whole move down through here is rather complicated. Also, too, from wave B here down to wave C here, it's a little bit tricky to get 5 waves out of this move here. It can be done, and the same with this one here as well. I'll show you this a little bit later on, is that I can count it up as 5 waves, which would leave us back to this point here. But we also need to be mindful too that it can be counted as a corrective rally. So as long as it stays above the 5800, then it's positive at this stage. But the thing about it possibly coming even lower here, or coming to test make a new low here, it is really on the cards, because when we've been looking at Rio, for instance. This is just Rio on the daily chart here. I'll just squash it back in. As you know, we've been looking for 1, 2, 3, 4, 5 for 1, an A and a B and a C for 2. So we're not finished with wave C here just yet. In fact, this would be wave 1 and 2 here, and it would be wave 3 coming down here. Normally wave 3 comes to either the tops here or previous lows, and that's why you get 4. Another reason why 4 can get complicated. But for me, this still has, to me, that's just a corrective rally. For me, this still needs to, work down a little bit lower in this instance. And yeah, so I can leave that at that. Now, on the positive side of the fence, BHP's in the same sort of boat, so I don't need to look at that too much. FMG is a little bit interesting because it's really out there on its own somewhat. Now, I still haven't pulled this apart on a tick chart, but we counted 5 waves to this point. Wave A down, this was in 3 waves here. So then I was looking for 5 waves down into this space here. And, we could possibly start looking at that now in terms of 1 and 2 and 3 down to here. This may all be part of 3. But first of all, the 1650 here is a medium level. So first of all, it can drop lower. Okay, that's one thing. And then we'll have to work from that space. And that's cool too. But in the meantime, let's just assume for a moment that the market does make a bit of a move to the upside here. We want the first high above the level at the 1650. And then we can bring this down to this point here once we get that into play. Okay. That said, of course, it can drop lower. Into this space. I haven't pulled that apart, I just haven't had the time, but I can see that the trade setup would be if we get this here, because this would be one of the first stocks in the iron ore sector to lead to the upside. So we still see Rio to the downside, which can certainly take FMG to the downside. Okay, any support that's going to come in can come in from the banks now. So this is just CBA here. From the low to the high here, the 61.8% is down close at the, say, 62 area there. We can remove that. So we're getting that bounce off there. So the same thing applies here as well. Now, of course, I can basically count like 5 waves down into this space. Now, it may not be finished and may drop a little bit lower and cover a gap over here or do something like that. So it can just move up here and then make a new low here. Okay, so that's okay too. And I haven't pulled this apart, this last part on the tick chart just yet, and it does look like 1s and 2s and 3s, and so it looks like a little bit more here. But what I wanted to point out here is the same thing as well here again. So if we get the first high above the level here, and not to say that it's going to go up at that point, but that's where, even on the second high, we'll talk about that if it occurs, then this would be where we would need to be looking at going long here. So I just really want to point this out before it happens. And of course, it may just have the first high above the level and fade and continue to move down from that point, because there is a good case for new lows to be made here. I just want to have a look at, so 65 is a medium level, so support on top of that would create the long trade. That's what I wanted to point out. I'll just have a look at ANZ here. I don't bring it up very much, so it's probably... where's it gone? So with ANZ here, I've obviously talked about a short trade before. It's a good idea to take some profit at a level here for this, and then re-enter if the medium level here, 1650, also becomes the retested resistance at that point. So, but first of all, we'll just bring that down into that space. But what I want to point out here is that this is really not a good impulse wave. You know, it's not like a nice 5-wave structure. It's more like, whichever way you dress it up, it's a very sort of corrective pattern, which leads me to believe that all of this is just a larger corrective pattern in a way. You know, like something like this here for that. Because we've got 3 waves up here, I mean, we could look at it as wave 1 and back for wave 2, up for wave 1, ABC, back for wave 2 here. But it's pushing it a little bit. It's pushing it in the fact that this happened in these many days as a wave 1, and then so many days as a wave 2 here. The ratio doesn't really add up. Hasn't got the right look and feel about it. So it's more like this here. It's more like if I've got the, you know, in the March lows, the March lows for a lot of the bigger stocks around the world, but the tech stocks have led to the upside. I mean, they've basically moved up in 1, 2, 3, and they're in this wave 4 at the moment, finishing that off. So they've got one, I'm thinking they've got one more move to the upside here, which would also, in 5 waves, which would also give this one here 5 waves, and then this one here needs to fall back as an A and a B and a C wave here, and then move up from the point. So this, in this instance, while this is doing this, then this market will do this and make that new low here for this. That's what I'm thinking. Of course, I can be wrong, but it's good to have a few different plans, and then as they unfold, you know, we're edging our way into the market. So I will remove these here now and just take profit on this number here, because in this case here, it looks like we can count this down here as 1, little ABC for 2 here. So this would leave wave 3 all in here in terms of 1, 2, 3, 4, 5 in here. We could probably see this a bit better on the XXJ, which is the banking sector. So in this instance here, let me just, from this low here to this high here, we're kind of in that 50-60% retracement level there. So we're in the right ballpark there, and a bit more than that. We are also looking at 5,000 there, which is a major level. So it's going to be a bit sticky there, you know. But what I pointed out is that this move to this low here, you know, it's not in 5 waves, is it? You know, so I can count it in different ways, but at the end of the day, it's not a 5-wave structure to the downside. So it's part of a corrective pattern. So you know, if we assume that it's sort of an A and a B and a C wave here, then does this have 5 waves in it? You know, so, and we can get sort of a bit close to that. So this would be wave 1 and 2 in here, then 1 and 2 and 3, and probably 4 and 5 in here for the 3rd wave, and the 4th wave, and somewhere in here the 5th wave here. But there's no rush. We need to see, you know, Combank sit on the 65. We need this market here to sit on top of the 5,000. So there can be another drop here, but what I'm suggesting is that over time, if we can see, you know, this market come and basically sit on here somehow, give us the arrival, the reaction, the first high above the level, the ABC correction, then we can look to start going long at these points here. And that's pretty exciting because that means we would catch that next trend to the upside here. So it may just be, still a rock and a hard place because this may need to finish or it may not. And then we've got the materials sector. So if I can just stay on this platform and I'll go the XMM because it's just a bit clear of a count. Normally there's some sort of quality between wave A. We know we got 5 waves up here. We've been talking about it until the cows come home. And we've also got 5 waves down here. And then we'll look for the ABC correction. And in this case here, can you count that here? Well, it does appear that we've got wave 1 and 2 here, and then 3 here and 4 here. So there'll be one more move down through here. That would give us wave 5 coming down here. So all of that can be the A wave, the B wave, and the C wave here. I also understand too that it can be a little bit tricky here because when we're looking for the 5 wave structure in here, like this here, that could be the end of it and we could just push up from there. But at the same time, it may just be, we just need to be mindful that all of those 5 waves here don't make up just wave 1 of the next sequence to the downside. It's possible, it's not out of range because if we take the low here and the high here, then that would bring us down into the 50-60% retracement level. So, many times I see that wave C can be short here and then we just push up from that point. And secondly, I've seen it, wave C be longer than wave A. So all of them are correct. We just got to decipher it and figure it out, So one of the things that we can do is that this move down through here as 5 waves, when it has a rally here, because it's either going to rally in 3 waves or 5 waves here. So what we can do at that point is we'll just look to see if the rally is in 3 waves or if the rally is in 5 waves moving back up. That will be one way of looking. It's what we'll have to do with the stocks and we'll figure them out, But if we're in line with the banks, I think that we may have just the shorter one here for this. And then pushing up from that point. But like I said, that's just a guess. I don't know that. We have to gather the evidence along the way, and that's what we'll do. So just letting you know that, and this is where a lot of our focus is going to be. So even though I don't have any answers for the ASX200 just yet with that sharp spike up, which also threw me on the S&P 500 as well. But it just appeared, if we can just bring up the S&P 500 for a moment. So with the S&P 500, I was looking for 1 and 2 and 3 and an ABC for 4 coming in, no higher than the level here, and then dropping down. But it caught me out in terms of it had a 1, 2, 3, 4, 5 for the A wave, the B wave, 1, 2, 3, 4, 5 here for the A. But we had to move out at that point, you just got to take the hit, It's a bit unfortunate, but what I'm saying here, though, is that 1 and 2 and 3 and 4 and 5 coming down here in terms of 1, 2, 3, 4, 5. So this is the one that's going to turn up first. The Australian market can still drift down a bit lower within all of that as well. So we need to take that on board. But the other thing, too, that's becoming quite interesting is gold, because gold... it started its correction before the S&P, like a month before, back up here, if I just go to the 4-hour chart here, the reason I'm showing this is because it's part of the mining sector in a way. So we've got wave 3 here, an A and a B and a C wave here, right? So we've got 5 waves in this little move here that's basically finished. So if I go to the hourly chart just to get a bit of grip on that, we've got 1, 2, 3, 4, and then we've got this down here finishing here for this. So I think we've actually got the low in place here right now for this, but I just need to double check that before I go and open my gob. But yeah, I think that well, first of all, if you've been short, then it's a good idea to take profit, or at least bring the even bringing the stop down is even sort of better in a way. But let me just have a look at the 15-minute chart, if I've done anything there to figure that out. Yeah, I think we've got 1 and 2 and 3 and 4 and 5. I think that we could have the low in place for that. Look, I mean, because it's just a metal, and we're talking about metals and mining, so that's you know, that's acceptable at that point. So that with the S&P, so the you know, this rally here for gold stayed in check. The one in the S&P was a little bit higher. The one in the Nasdaq was high. The one in the Australian market was high. So it's kind of like a blip on the radar that we've got to basically suck up in a way. Let me just go back to the Australian market now and look at it, because you know, I was figuring that we're looking at 1 and 2 in here, and then there's a bit of difficulty in here where I can count 3, 4 and 5 in here, but I was just expecting a nice 1, 2, you know, 3, 4, 5 to come down a little bit lower here. And then I've got this move here that in other markets it's worked out as you know, 3 waves, and I can bring it in 5 waves. This is just 5 ticks here. So I can count it up as 1 and 2 and 3 and 4, and all the way up here for 5 for 1 and 2, and then 1, 2, 3, 4, 5 for the 3rd, 4th and 5th here. The 50-60% retracement level is down at this particular space here. Yeah, I mean, it could be counted, this at the moment could be counted down as an A wave, a B wave, and I've got 5 waves all the way down to this low here now. So that can be the end of it. That could be the A, B, and C here. But if it pulls up 38.2% and then drops again, then we've got a problem. So that there, a retest of the 5.9, so it can pull up to that point and then fail. So what we could say, if it found support on 5.9, then you can go long from that point. I mean, you can go long right here and put the stop under here if you want, and then, you know, cross your fingers. And don't forget to breathe. But otherwise, the 5.9 here as support would be good, would be one place to get into at this stage. I mean, really, all of this is a reaction from the 6,000 at this point. Even though it didn't reach there, it just, you know, came up to its previous high here, and then it's faded from that point. But if it can find support on that 5.9 there, classic trading levels pattern, then we're okay from that point. So the mining sector can drag it down. The banking sector can support it. So keep a very close eye now on the finance sector, the banks, to see if this market is going to be tracking the banks or the materials sector. That's really the gist of it at this point. So I don't have any clear entry points for us at this point, except if 5.9 becomes a tested support with a classic trading levels pattern, then we can move in from that point. So it would need the arrival, the reaction, first high above the level. That gives us our reference point, and we'd be able to get a better one from that point. But yeah, you just got to be careful we don't just come up a little way here and then move down into 5 waves here. Because if we get 5 waves down here, then we're going to get a corrective move and then another 5 down, which may just bring it down to the, you know, 5.8 again. But we need to look for a setup. The bottom line is I can't figure out this one. and this one here can be counted as 3 waves or 5 waves, so it doesn't really, and I've pulled it apart so I can see how it can work with both. So it's not clear for me, so when it's not clear I just gravitate to the closest largest number and look for a trade setup, either be it long or be it short. So that's what we're doing at the moment. And Thursdays, as you know, is normally a swing corrective day, and in a bull market it's bearish, but in a bear market it can be bullish. So normally we'll get our run on the Friday and the Monday. So that's what we're looking for on the Friday and the Monday. If we get support there, well, then we're going to be going higher at this point. I mean, all this finishing here as a corrective move is good. I mean, we're looking for it to finish. It just didn't give me a beautiful picture here, that's all. So it's thrown me out, and and then this is not in line with this. This is quite a big move, really, compared to other markets around the world. All right, I'll leave it at that. Thanks for tuning in. Cheers.